All right, let's dive right into a story that absolutely rocked the Indian stock market. We're talking about a blue chip giant, a name you all know, ITC, and the massive, sudden chaos that hit its share price. Just look at that number. In one single day, the stock just plummeted. It wiped out a truly staggering amount of money and left investors completely stunned. For a company that's meant to be as steady as ITC, a drop this big is a huge deal. So today, we're going to break down exactly what happened and, more importantly, why. So here's our game plan. First, we'll really get a grip on the scale of this fall. Then, we'll zero in on the one reason that triggered this whole thing. After that, we'll see how the big brokerage houses reacted, listen to what the experts are saying, and then we'll tackle the biggest question of all. What on earth is next for ITC? Okay, let's really put this into perspective. This wasn't just a bad day at the office for ITC. This was a historic nosedive. It sent the stock to a low we haven't seen in years, and it completely shattered market confidence. The numbers, well, they really tell the whole story. The stats are just jaw-dropping. The stock dropped more than 8.5% in a single trading session. It hit a 33-month low. That's almost 3 years of gains just gone. It smashed right through that critical psychological level of 380 rupees, and in the process, get this, more than 70,000 crore rupees of market value just vanished into thin air. So what in the world could cause such a violent reaction in a company this big and stable? Well, it all comes down to one single government announcement, an announcement that struck right at the very heart of ITC's main business. The trigger was a new tax notification. Essentially, the government tweaked the GST structure. They absorbed a special tax called the NCD, that's the National Calamity Contingent Duty, which is slapped heavily on tobacco products. Now that might sound like a bunch of technical jargon, but for ITC, it was a direct hit to its biggest moneymaker. And this chart right here shows you exactly why that tax change was such a bombshell. You see, while ITC has branched out into hotels, paper, and all sorts of other goods, its cigarette division still hauls in a massive 48% of its revenue. That means any negative change that hits this one segment has a huge, outsized impact on the whole company. Now, you can bet the market's professional analysts were watching all of this unfold. And their reaction? It was swift and it was decisive. The verdict from them was overwhelmingly negative. A massive wave of downgrades just swept through from the biggest names in the business. We're talking global giants like Nomura, Morgan Stanley, JP Morgan, and Jefferies. And right alongside them were major domestic players like Motilal Oswal and Kotak. All of them slashed their ratings and their price targets for ITC, which basically signals a major loss of confidence. The message from all these big firms was crystal clear. This new tax creates a ton of uncertainty. They think ITC is now stuck between a rock and a hard place. See, to deal with the tax, they might have to hike their prices by a whopping 25 to 35%. But if they do that, they risk scaring away customers, which would hurt their sales volume and ultimately crush their earnings. Not a great position to be in. Okay, so that's the problem. But what does all this mean for you, right? If you're a trader or maybe a long-term investor, what's the smart move right now? Let's break down what the experts are suggesting. The advice really splits depending on your strategy. For the short-term traders out there, the message is caution. Big time. Since the stock broke that key 380 rupee level, all the positive momentum is pretty much gone. The advice is to think about selling off some of your holdings. Now, for you long-term investors, it's a different story. Your holding period might have just gotten a lot longer, and the consensus is to hold off on buying any more until the dust settles and the full impact of this tax is clear. To get a sense of what might happen next, let's look at the key price levels the pros are watching. For a very long time, 390 rupees acted as a solid floor for the stock. It would often hit this level and just bounce right back up. But that floor has been completely shattered. So now, the next potential line of defense that experts are pointing to is hovering right around the 345 rupee mark. And if that doesn't hold, the final major support level is way down at 330. A lot of analysts believe the stock absolutely must hold this level to stop a much, much deeper slide. So, after this dramatic collapse and this flood of downgrades, what does the road ahead even look like for ITC? Well, the general feeling is that the game has fundamentally changed. This quote from one market expert really sums it up perfectly. The structure has completely changed. Avoid fresh buying until the whole matter settles. The advice is pretty much unanimous across the board. Stay on the sidelines and wait until there's some clarity on how this is all going to play out. And all of this leaves us with the one big, multi-billion-dollar question. Is this a painful but ultimately temporary setback that a giant like ITC can recover from? Or does this government action represent a permanent, structural blow to the company's value? That's the question on everyone's mind.